right, good morning, everybody. Welcome to the London session on TopstepTV. If you're here for the first time, my name is Deeyana Angelo. I've been a future trader since about 2013, but before then I spent about 5 years being a swing trader independently, and then decided, hey, I'm pretty good at this. Let's go into intraday prop trading. And here we are many moons later. I specialize in commodities such as crude oil, mainly, and also metals. So gold has been my baby. And also I like to do ES trading towards the end of the day, so sort of power hour is when I would typically look for ES trades. But having said that, I am keeping an eye on equities after that big run up last night. It does look like they did the typical stop run through Asia highs and then a reverse. Now, if we can get some kind of a committed movement below this session VWAP, there's a bit of an opportunity for a fade of that move. This is something that sessions do, especially when you've had a very big movement during the main session, and then overnight it sort of trickles even higher, and then by the time that London opens, they're like, it's a bit too high, we can't actually make any money here, so they decide to take it to some new levels. So where would those new levels be, or old levels even? Well, the first area that might bring us further upside is right around here. This is why I'm looking at ES here. It's kind of like a benchmark for equities. And then we're going to move on to crude oil because things are a little bit quiet there at the moment. So I don't know whether I'm going to be finding a trade in crude oil this morning, or whether, we're going to be finding a trade during London at all, considering that we do have PPI today. So I would ideally like to wait until that's all out of the way and then maybe trade the afternoon session. So we'll see. For now, ES sitting just under the overnight VWAP, with a bit of a dangerous area at 55.6250, and it looks like we want to maybe bounce from there. As the next point of interest, I have the Asia low at 55.54, and then things get a little bit muddy there around 55.50, so that could be another supportive area. But again, if we start to break down through it, then we're going to have a nice fade on the way. And because of that nice clean move upside, like if you look at how the chart events are looking, this is all a pretty clean move up, right? So whenever you see this, if we do start to eat into that area, there's nothing really to stop us going all the way back down, because it was a smooth run up. There was no speed bumps. The speed bumps are all up here during Asia, even though that's like inactive trading hours. And if we manage to fall through that, there is a very good chance that we're just going to keep going. And anytime you see this sort of a move up, like I said, it's very smooth. So when they start to fall through it, there's not many orders there sitting, waiting to reverse it. That's a supply and demand concept. Now, if I compare, let me find a messier movement up. Just going back in time. This was Asia. So just to kind of illustrate the difference between the strength of the move that we had before. All right, so look at this one. This one is very choppy, right? So we have, up, down, down, wick, up, wick, consolidation, up. That's very choppy, right? And it did that all the way on to the upside. And now if you compare the one that we have at the moment, the move up that we have right now, is literally just up, 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 up. So since it failed the auction after CPI yesterday, it just shot up. So that is beautiful if you were in on that. However, now we can, plan our levels around it. Since there's nothing in between, one approach that you can do is maybe look for the edge of that demand on a slightly higher time frame, like a 1 hour chart. So I can see that the first sort of area where some orders may be located is 54.57. So we're quite ways away from that. And then on a 4 hour chart, 54.89. So that'll be the first area of support where we may see further upside, but that's only if we manage to stay up at these levels. And like I said, I have some other levels all the way up in this smaller area. So that's going to be my guide for today. And I may do a little bit more equities trading today, so we'll see how the day goes. So let's move on to crude oil. Crude oil very quiet this morning, but I'm still going to do my usual analysis to give you some levels of interest. Just to remind ourselves, so we are sitting in kind of like a very, very large time frame outlook. I know that there were demands here from probably last, let's say June or something, just trying to remember the continuous contract. And it turned around not too far away from the very lows. Now, when you look at supply and demand areas, very frequently you won't get all the way down to the lows. Like there's some products that are a little bit more slippy than others, like NQ loves to run highs and lows, but crude oil generally on such a large time frame, it will kind of get too close to there and then it will reverse. Now in the weekly strategy video on my own YouTube channel, I was talking about 65s as as a potential zone for this week, and look at this, it was like 65.34 and then we went higher. All of the levels to the downside that I mentioned were reaction zones. So 66.50 was a zone that brought a failed auction ultimately, even though we kind of overshot it by a 90 ticks. But I had a very big zone from 66 all the way up to 66.50 as a potential reversal area, and that's exactly what we got. And now we're actually sitting in a bit of a speed bump supply here. So we had a big sell-off a couple of days ago. We're back at those levels. So there's a chance that we go higher from here. But I don't think we're just going to shoot straight up. I think there is some space for a bit of a pullback here. And I'm just going to see some levels of interest. So 67.50 would be a decent area for me to look for some support or alternatively a break through it. The only time I will look for reversals is if we're like up at ADR high, which is nowhere near at the moment. Like ADR high for today is set all the way up at 49.47. I also have some levels up at 48.88, 48, 68, 88. 48. Sorry guys, it's super early. So yeah, 68.88, where we also reversed yesterday. If you were on my Twitter, I was kind of texting or tweeting or however you say it today, posting, I suppose, posting the levels of interest, and 68.87 was a level that I was watching like a hawk. And yesterday into the end of the session, literally for the last half an hour, we actually got a very nice, I think it was like a 60-tick sell-off from there. And because of all the levels working out nicely and having lots of movement in crude oil, I have 2 new XFAs. So I'm going to be trying to get those off the ground for the next week or so. All right, so do we have some movement? We are getting to Asia high. So we are above Asia high on crude oil. And we have overnight VWAP just underneath there at that decision point around 67.90. which was also previous day's high. If we can break that down, maybe there's a trade in there. But again, I think I'm going to stay patient just to get a very good understanding of what sort of a day we have. We had the inventories yesterday. I marked off the inventories range for the first half hour after the inventories, and we're kind of sitting above it. So that could be a bullish sign. It could be a sign that we may get a recovery. And in that case, I mean, I've got 71.40 to the upside. If we can get all the way up there. And then obviously a whole bunch of intraday levels on the way up and down that I'm going to be using as an orientation tool for my OODA loops or OODA loops, however you want to call them, which stands for Observe, Orient, Decide, Act. It's kind of taken from a fighter pilot training, because as a pilot in an air fight, you're always at a disadvantaged situation. So you have to find ways and situational awareness to make that in your favor, which is, always to do with where you are, where's the other guy, what are these people doing, what's our position, how can we make that happen? And this is actually very similar in trading. You always have to be aware of all of these different orientation points. I mean, I really don't know how people can just trade. It's like, oh, view up, I'm going up and down. It's like, what are you looking at? It's like, where is your target going to be? Well, I don't know. I'm just going to see how it goes. Okay, great. But I can't trade like that. I need, data points on the way up and down that actually make sense. And you can use those from like options chains. You can use that from, value area low, high, average daily and session ranges. And for me, it's also the TPO profile. So we'll see. So to me, it's an easier way to trade because, as you're arriving at each data point, you can kind of see what the price action doing that. Are we reversing? Are we going through it? And then if we go through a data point, you can basically use it for another bounce intraday. The main problem with crude oil that I had was that it just wasn't moving. So it's like if there's no movement, I have a data point and it's like just not doing anything. So I'm like, we're just stuck at like IV high, IV low. And I'm like, but there's a level. So now that crude oil is back moving over 200 ticks per day, D is one happy bunny. So that's all I'm going to say. Okay, Joe Chakungal says, D, what was the, I probably butchered your name, I'm so sorry. D, what was the orientation level for ES after the initial sell-off? Okay, so like I said, I have 62.50 right where it's actually turning around. But for now, like I don't actually have any clear directional clue for ES, right? I have an idea of what might happen. And personally, I would like to see a sell-off. So right now we're seeing another pop from that first area of 62.50. But I mean, the whole range is still only 62 ticks. That's exceptionally low for ES. And because we're still sort of in Tokyo and Asia range, right? So until we break out of that, I don't really see much on ES, right? So we really need to break out of that, either to go higher, and then I have the next data point to the upside at 55.98, or if we sort of break down through those 62.50s. Let me just go and reference some of my notes here. If we manage to break through VWAP, which is not happening right now, VWAP is supportive, then I have sort of 55.40, 55.50 as the next level where you might want to look for a breakdown or reversal. Now, if we manage to break through that, then we have those 54.89s, which is the 4-hour demand level, right? So I did show you that here. So here we go. That's where it is. 54.90. Let's go. And round it all up, right? So that would be kind of my guiding points where prices might stutter. And, there are others on the way and stuff, but, they're less relevant. I can see that 55.23 was sort of reactive. We sort of tried to sell off there, then it bounced again. So if I drop down to a 30-minute chart, I will show you what I mean there. Let me just plop a line. Horizontal line. So 23. Okay. So if you notice, it was actually a little bit higher. It was like 55.25, let's say. So we kind of got to that level. And first of all, on the run up to that level, we had a little bit of sell-off. Then we jumped away from it. Then we had a sell-off and then another bounce. So this was an attempted reversal that failed. And then for some reason, they found some support at 55.25 and carried on higher. So 55.25 could be, you know, an area to watch out for as well. And then obviously the big round numbers at 5500s to the downside, and then obviously my 5590, which is that 4-hour demand area. But yeah, for now, no play anywhere. So we're going to wait. We are going to wait. Crude oil is definitely interesting with this overhead supply here. Not for any kind of like big swings or something, but it would be a good area to maybe get some commitment to the downside. I would like to see it break 68s. And without that, we just have a random walk. If you don't know what a random walk is when there's kind of like lack of interest in the markets and the price is just kind of bouncing back and forth between the bids and asks, but not really committing to any side, just kind of like bumbling around, directionless movement. So they refer to that as the random walk, right? So it means nobody is really initiating any movement. It's just, you know, doing its own thing sort of thing. So I need some commitment before I'm going to open up any trades today. And we're not getting that. So, you know, might be a little bit boring. Now, while we wait for that, I'm going to say that I will be joining Dakota for his takeover today from 7 p.m. my time, which is 1 p.m. Central, 2 p.m. Eastern. And then we're going to be hanging probably for about a couple of hours all the way into the close, which is also another reason why I wanted to keep more of a pulse on ES, because that is what I trade during that time of day. So we might be able to find some trades then. We'll see. All right, so we're tagging 68s. Let me go back to crude oil. So I'm just going to put down some orientation levels here. So this is Asia high. Then right underneath that, we have yesterday's high at 67.96. So all of that needs to go away. So we need to break down below it. And then, you know, even if this goes higher, I'm like working with 48 ticks for the overall London movement. So we want a bit more. You know, I want to see, a lot of the times I will intentionally miss the first move because I want to see how far it's going to get to, right? If it's like, if it doesn't have any juice behind it and it just kind of stops at the first orientation point and starts migrating higher and we're sitting in like 50 tick range, I don't want that. I don't want to trade 50 tick ranges. That's like very painful. Okay, so previous day high. Let's just change the label here. Text alignment, maybe middle, bottom. There we go. Okay, that looks better. So yeah, until we're below VWAP, effectively overnight VWAP, which is also previous day high and Asia high, no trade. If we do go all the way up higher, 68.88 becomes an area of interest. Again, that was reactive yesterday. Slight overshot, but generally that's where we turned around. So that remains an area of interest. And then further up into the day's extremes at 69.47. That's the average daily range high. But yeah, all a bit boring this morning. They're probably waiting for PPI, right? Probably waiting for PPI. I was talking about ES yesterday's sell-off. What caused the turn? Well, the sell-off was caused by CPI release, and then the turn was just people deciding that that's good for the market, and, you know, faster buyers than sellers. In that case, it was a classic sort of take out any relevant levels. So if I go back, so we had the London high at 54.98. So again, if you remember yesterday, I was talking about the stop runs that they like to do. So here we go, London high. Stop run through London high. As we go into the release, it goes jumping off a cliff. Let me just go back in time on my other indicator. Finds the average session range low at 54.31, overshoots it because it was a release. But again, you know, these sort of releases, levels will get overshot. Everything is a zone, right? Overshoots it and then goes into a nice failed auction. And then up it goes. So again, copy paste, Monday, Tuesday, Wednesday. We had like literally the same event happening. London high gets a stop run, then it reverses. Very difficult to catch that, but you know, you sit out, fails the auction, and goes into an uptrend. That happened on Monday, that happened on Tuesday, and that even happened on Wednesday. So out of the 3 days that we were observing this week, ES did copy paste behavior. Is that by accident? I don't think so, right? So if you learn to have those highs, lows, and if you learn to kind of expect and anticipate the stop runs through the previous session highs and lows, especially if we're inside it, we're opening near them or inside them, it's a very good way to have those orientation points and not to get lost. And just to go, what is happening? Why? Why did it reverse? Because it failed the auction. They decided they you know, that this was too low. And that, you know, yesterday's release was something that they liked. So they're like, okay, well, we shook everybody out on the way down. Let's go back up. But from a technical standpoint, as somebody who's a technician, this was a very similar move to the ones that we see pretty much every day. You know, we open sort of near the London highs or lows. We do a stop run. It reverses, does a huge move in one direction during initial balance, then reverses for the following period into New York lunchtime. Now, how big this move is, that's, you know, nobody knows, right? That's an unknown at the time. But what we do know is that it failed the auction, right? So if you know how to look out for failed auctions, they're very powerful, especially if it's to the long side in equities, because there's always a very kind of strong bias in equities to go higher. Thomas Winton says, what does ASR stand for? So ASR is my twist on the average true range, where I only use the regular trading hours and then I call it average session range. The way I calculate that is exactly the same the way I calculate my own ADRs. They're dynamically calculated using session highs and lows and then plus minus the number that represents either the previous 10 days period or 14, but sometimes if we had abnormal weeks, I will actually widen the period to like 40 to smooth everything out. Just depends on what we have, but most of the time I will keep it to 10 and 14. Oliver says, how about gold? Gold is still very messy to me, so I can have a look at it. But to me, gold is still terrible. So looking at it on the weekly chart, I have some random things here that I need to get rid of. Let me just clean up the chart a bit so then we can talk. Within some measurements or whatever, something here. Okay. So if you see the weekly chart, look at these wicks, right? It's like wick, 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 wick. Barcoding, even on a weekly chart. Those are very painful. There's no movement. Everything is just sideways. And to make, matters worse, add insult to injury, we're now sitting at in the middle of the daily range. So as far as bad trading locations go and, bad chart locations, this is probably the worst that it gets. I really want to see some sort of a shakeout outside of this range. Because right now, apart from maybe like scalping and stuff, but even that would be exceptionally difficult, right? I would need to see a lot of information in order to confirm or invalidate a particular trading idea. Because for now, like however I spin it, it looks bad, right? It looks very bad. Even on a 4-hour chart, we're now still in the middle of a middle. I still have those 5200s as a level of interest. Now we have another little data point as 2415 as a as a low. There's another more localized one at 2529. But yeah, just middle of the middle of the middle of the middle. So for gold for me has been a complete no for this week. And then on the day time frame, let's have a look at what we have. I mean, that's pretty messy as well. So it's opening below value. Had a test on value low during a late part of Asia. That got rejected. Now we're trying to fill the auction, but again, 50 tick range all in. Pretty terrible. And now it's trying to go higher. So again, if I was gonna just guess where this is gonna go purely because of the strong uptrend, maybe into value acceptance, and then there are levels up at 25.55. But really nothing that interesting. I just don't really see gold very clearly right now. It just looks exactly like the larger time frames. Looks a bit messy, unclear, with a lot of conflicting details. So we have bearish engulfing from the value low of London yesterday. So that would be a rejection during Asia. So Asia high still stands. I would like to see that as a stop run before we do anything. But now we have a bullish engulfing. However, the auction tried to fail. So in fact, now we're going to have bullish engulfing, and yet this next red candle is about to fail the auction. That's not what I want to see. Like when it's failing the auction, I want to see the opposite. I want to see a bearish engulfing to the downside, right? Not bullish. So to me, this is all just one big mess. At least for my style of trading. So I don't see gold very clearly, and this is why I've left it alone for this week. But I mean, it's a great product. When it moves, it does move. It's just I like to have some more clarity before I'm going to get involved. Future Millionaire says, hi Dee, so you like to use Asia high low for targets exits? No, so I like to use Asia high low and London high low, so previous session, whatever we have, so previous session. I like to use them as areas for a stop run. It's kind of unlikely that the previous session that is usually quieter than the one that's coming up, that it's going to like hold the levels on these particular products. So I actually anticipate a run through those areas and then potentially a reversal. So I don't use them as support and resistance, quite the opposite. I use them for areas that will be used as liquidity grabs, right? So market makers to go, where's the nearest high? Oh, I know, Asia high. Let's go and grab some levels there. And that's all they're doing. You know, we call it the stop run, but really it's because the moves that they want to do run out of steam. So you need to pick up some more orders. Therefore, you need to find the next logical point. And for market makers, for locals, that will be the nearest levels. And those tend to be previous session highs and lows. You'll always get, you know, plenty of retail stops that you can grab. And then they do whatever they're going to do. So this is the way I like to use them. And then when New York kicks off, I do the same. So I take the London high, London low, especially if we're inside it. I will look for stop run through those levels first, whichever one is the closest. And then I might decide if I'm going to go with the break or maybe we have a failed auction in progress. So yeah, it's effectively a level that I expect to be broken, if that makes sense. Taryn Nagro says, do you recommend the data package so we can see the full data on the dome? I mean, to me it helps. However, if you are a more novice trader, right? So tell me how long you've been trading, right? How long have you been actively trading? Do you have consistency? That's also another question. Because if you don't have consistency yet, if you don't quite know what you're doing, and if you're still kind of finding your own style, I'm not going to say, oh yeah, don't do it, because some people actually find it helpful. However, a lot of people find it noisy. There's no value in the dome to them. They are confused by it, and they add analysis paralysis into the mix, right? So it depends on your level of experience. It depends on where you are in your journey. And it depends on your style of trading. You know, if you're a pure technician and you just look at candlesticks and stuff, I mean, you may not even need to look at the dome, to be honest. But, you know, over the years, I found tape to be useful because I can see some more minute reactions that end up as bigger reactions later on. So those are not immediately obvious on the candlestick chart, unless you're like looking at it as the candlestick is developing. So, you know, for example, seeing that 68s are being reactive, right? So even if this candle, like let's say on the crude oil, yeah, on crude, if I just focus on this. So I can see that 68 is reactive, right? I can also see on the dome, we had some orders there and we still have orders at 67.90. So even if this breaks down, I will know that 68s were causing some trouble before they broke. So therefore, if we break through it and then retest it again, I may look at 68s as a potential for a pullback scalp intraday trade, right? Because I saw this problem. They were having issues with it. They were like, no, we can't quite break it. Then once it goes, it can basically be used for another resistance level. But you won't see that, right? All like after the fact, if we do break through it, all that you're going to see is just one candle down, another candle down. You won't see this intra-candle development. So that's where it might be helpful if you weren't there to watch it. If you look on the dome, usually you will see a number of orders that are a little bit bigger than the rest of the orders. So at least that's how I like to look at it. And then I also like to look at some of the bigger orders away from the current levels. So to me, it's useful. Whether it's going to be useful to you, I don't know. Try it. It's only $39. However, we are now almost halfway through the month. Data always goes on the first or the second of the month. So even if you sign up now, they will still charge you on the 1st. So you're only going to get 2 weeks worth. If you're going to sign up for data, wait for the beginning of the month, then you get like a full month. But you know, it's $39. It's not exactly going to break the bank, right? So I don't, you know, I'm not going to recommend for or against anything. Try it, see if you like it. If you don't like it, discard it, go back to normality. You know, this is what we have to do as traders. You try it, you see whether you gel with it. If you don't connect with a particular concept, you throw it away and carry on to the next one. And, you know, all of us that you see on TopstepTV, whether you've been trading for, you know, 10, 15, 30, 40 years, we are all a collection of different techniques that we've picked up from colleagues, that we've picked up from, you know, videos, but mostly in my case would be from colleagues, because I've always learned from people around me. You know, I did go through a program that, you know, cost money, but even that was like people around you, right? It wasn't just some random person on a subreddit. Joe says, did you pay attention to moving averages other than 9 EMA, which you use for timing the entry? I'm going to say not really. I have another chart over there with like 100 daily moving average just on the daily chart. I use that, right? But I don't use it as like, oh yeah, you know, it's definitely going to be a level. I just go, okay, arriving into that area. And that's, you know, that's the extent. So I'm not a moving averages trader. I think I can see the market better through some of my other ways of doing things. And then if I need to time the entry into a reversal and I want to front run it, that is when I will use them. So to me, they're not levels, like not to say that it's not valid. Again, you know, 1,000 ways to, what are we saying now? 1,000 ways to peel an onion. That's the one. So we decided to leave creatures, loving creatures like cats, out of it. So now we're using the analogy of peeling an onion 1,000 different ways. If you are somebody who likes using moving averages and you find them super useful, excellent. I like to look at the chart more from a horizontal point of view rather than a vertical point of view. So no trend lines, no moving averages. I would look at maybe a slope of the moving average if I'm already in a trade, but I would not be making my decisions purely based on that. Because, you know, if something fails in auction, let's say, for example, my favorite setup, failed auction, you're not going to be you're not going to realize what's happening until much, much later on. So even if I use a very fast sort of moving average on a low time frame, so I'm just going to put a reference vertical line here to illustrate what I'm saying. And I'm going to go down to a lower time frame. So let's see. I don't think I'm going to be able to find a trade today. Like nothing's really moving much yet. So yeah, I think it's going to be a case of PPI. Waiting for the PPI. Okay, so here's what I mean. I'm on a 5-minute chart, and I have a pretty quick 9 EMA plotted on the chart, right? So when it starts to reverse, and you know, bear in mind that usually the reversals that you will see, they will take time to show the upward sloping thing and the fact that the movement has begun. Otherwise, you're going to get chopped up in this sort of thing. So it's like chop, 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 chop. It's like, oh, it's moving. Smack. Oh, it's moving upwards. Smack. So, you know, you have to be very careful how you're going to utilize these things. So at the time when it failed the auction, I could already see that it failed the auction already sort of around this area, right? But until we had an upward slope on the actual moving average, and this is a very fast moving average. Usually people use like a, you know, a 20 EMA, maybe a 5, and then some sort of a crossover between them. So let's have a look at how that would have looked like. So let's go down to 5, and then let's do a slower one that's going to be 21, for example, and we're going to make it faster as well. All right, so they only crossed over pretty late, right? So I could already see that the failed auction is going to happen when we started pushing, and I did have a reference level of average session range low already. However, this one didn't really cross over until we got to like properly, if I'm going to be like a purist, broke out of this consolidation. So really up until 54.43. To me, that's a very late entry into an intraday trade, because then you have to use like what, a 40-point stop. That's ludicrous. So for me, it's better to look at it from a horizontal point of view, pure price action that gives me real-time data, and that just works better for me, right? But if you find moving average is useful for other things like me, like timing into the entry, then something like this is already good, because this is like the same thing as price action, right? We go down, we cross over the 9 EMAs, that's your entry. That's your front run entry into failed auction, and then you just wait to confirm. Maybe you can confirm via crossover or moving averages, but for me, I don't find them, that useful. So I don't use them. Cedric says, good morning, everyone. What are your favorite assets? My one is crude oil. Everybody knows that. What about everybody else? What do you guys like trading? Let's put it down in the chat. What does everybody like trading? Let's see. So Taryn says he's only been trading for 1 year, been on NASDAQ for 3 months, seeing good consistency, but don't use the dome. I would say 1 year is probably quite early still. So if you're seeing consistency, don't mess with it. If things start to not work out, maybe you can start adding things to it, but just be sensible. So NQ, ES, okay, a lot of ES traders, that's good. Gold and ES for Yarden, okay. NQ and GC, okay, that's an interesting combo. Kelly Girl says GC, but it does not like me. So you're like Robert Cooney. He's like, yes, I'll trade GC, but I just can't seem to make money in it. I think it's because Robert looks for like pretty quick moves, and then if he gets the day when you're not going to have that, it's just not going to gel. So yeah, a lot of ES traders. Dave's Pirate Life says we want DAX. Yes, we do want DAX. Hopefully it's gonna come. Raising Sailor says corn. Well, you're probably one of the 2 people who trade corn. I don't know if I've heard anybody trading corn in Topstep. But I suppose now that Linda Rashke mentioned it, we're going to have a lot more corn traders. So how are you doing on corn, Raising Sailor? Just interested to know. Let us know how's your corn trading going. Okay, M. Musa says, what sort of VWAP do you have there? I use fixed range volume profile. Well, volume profile is one thing, but VWAP is just a moving average that has a volume component inside it. So this is an overnight VWAP. So it starts, I think, Globex time. So it's anchored to Globex. I still don't know how to anchor it to anything else on this platform. I should probably learn. But I only use the overnight VWAP. I find the session VWAP might be useful, but only towards the latter part of the sessions. I think if we are trading for the first 2-3 hours, session VWAP to me doesn't have enough data in it. So it's a little bit sketchy to me. But once we've developed the session a little bit more, then we can maybe look at session VWAP as well. But yeah. Lean hogs, yeah. I have not. So Blue Boy says, I'm interested in the corn experience you have had too. I have no corn experience. Okay. I have never placed a corn trade in my entirety of my career. It might be too slow for me. Dare I say it, right? Because I think that since like I've traded crude oil for so long, I'm just used to a certain amount of movement. And this year, because it got like locked into a bit of a non-liquid year, it sort of scarred me. So at the moment, I don't actually want something that moves less than crude oil. Crude oil is just livened up, so I'm back to trading my main product. Not really keen to try other things that don't move as much. Right, here's somebody who trades a whole bunch of stuff. So some bonds and T-bills. No, just bonds. Don't know whether we got T-bills here. But yeah, that's quite a nice stack of products there. Servant Thought, CLGCESZBZN, or ZBZN. See, I started taking on the accents of my TopstepTV colleagues. So now I started saying ZB instead of ZB, which is the UK way. Oh, somebody's asking me what my horoscope sign is. I don't subscribe to the horoscope thing, but I am a Sagittarius. So if that means anything to you, I'm sort of a pretty how would I say it? I suppose I'm an agnostic or an atheist with an agnostic tendency. So I don't really do the whole juju nonsense thing. I suppose there's maybe something to be said for being born at a certain time of year, and then different seasonalities impacting your personality. But yeah, I mean, it's just all nonsense to me. So Vishy says, I only recently started following you and realized our trading style in oil is very similar. Although your analysis differs, we arrive at similar judgments. That's interesting you say that, because most of the people who have been trading the same product for a long time, even though they can use completely different ways of analysis, they still arrive at the same result. Prime example, Coach J, right? Whenever I speak to Coach J, we always have the same levels, and yet our styles could not be more different. He's more of a scalper, and he's very focused on volume. I am more of an intraday sort of swing trader, and it's totally not focused on volume, but I suppose supply-demand areas, reaction zones, all of that does have a volume component inside it. So even though I don't stare at the volume candles do or die every day, I still come up with the same sort of conclusions. And it never ceases to amaze me how much on the same sort of wavelength we always are. So every time I speak to Coach Jay, I'm like looking at that, and he's like, I'm looking at that too. And I'm like, how does that happen? So it doesn't matter what you use, you will have similar observations about the price, right? Ultimately, that's what we trade. We trade the price. And it's very likely that if you've stared at something long enough, you will have the same sort of ideas about the movement. Now, how long you keep a trade and where you're going to get involved, that's, obviously slightly different. But even that, like Coach Jay and I always have like interesting areas that just, they're always almost to the tick, like same price. So I remember when we first started doing the Markets Talking with Dee segment together, I was like, how does this, like, he's so different from me, and yet the analysis just works, It's fascinating. It definitely fascinates me to no end. Like, it's absolutely amazing. Bob, hello Bob, very good to see you here. Hello Dee, how many days periods will you use for your ASR calculation? Is it 14? So it really depends. It's either 10, 14, or maybe 40. Now, if I've had a couple of weeks of abnormally large days, I will smooth out that whole thing to 40 rather than trying to use the abnormal sizes of the previous weeks and then not quite getting to any levels ever, right? Because it's always going to be like, oh, I have the ASR a million miles away from the price, but then it comes back to the norms, which were outside of the 2 weeks when we had extra volatility, and then it never gets reached. So then I'm just sitting there going, it never got reached. Okay? So, you need to have just like some logic behind why you would use a certain time period. But as a general rule, 10 days, pretty good. 14 days, smooths it out a little more. And then 40 days, if you're really kind of looking to maybe avoid the outlier weeks. So let's put it that way. Oh, I'm going to need a nap after this. Granny D. I'm also going to have a very long day today because obviously I'm on with Dakota very late in the day. And then after I'm done with that, I'm going to bed. It's going to be an early night for me. Long day, but an early night. That's what we want. Someone's saying ES heading for Asia high. It's already taken out Asia high. Now we are supportive. We're trying to go higher. So really, on ES, I really don't have much up until 55.98 on the upside. Like literally just clean move. Let me have a look at some larger time frames, but I don't think that I've got much in the way. If this kind of starts smashing upside again, oops. Let's go through all the time frames. So 1 hour looks like it's breaking out. Yeah, so I've got nothing in the way until 55.98. Interesting. Yeah, I mean, if this picks up speed, this is going to be a breakout from Asia high, and then aiming to get into the London average session range high at 55.98, maybe even 55.60, because that's a good round number. So yeah, interesting. I would have liked to have seen a pullback. Like I'm a bit annoyed that it's not. This is one of those things that equities do, right? It's just like close your eyes and buy. Like I call it the point, click, and pray PCP trade, where you see a trend and you don't really like, you try and do analysis, but it's like, why? It's just gonna go up, and then you just you point, you click, and you pray that it's gonna carry on. That's your analysis. And it's very, very equities related, right? Equities are probably the only things that just go on such strong uptrends with zero pullbacks. So it's quite interesting. All right, so yeah, I mean, I do hope that we get a little bit of pullback, a little bit, just a little bit. Otherwise, this will be a very difficult day where you just size down, enter a pullback of like 5 ticks, and then you go. Because, yeah, I mean, the most amount of pullback that we had was 13 handles, literally up to the first data point of 62.50. Turned right there. And now it's just trying to break upside. And if that happens, I would not stand in its way. All right, let's take one last question. And because I don't really have anything else, like literally I don't have anything else on the cards at the moment, so we can finish it up. Timotheus says, last night I heard Dakota say that the Nikkei is 25 per contract. Where is this found, or how do I determine this? This is determined by the CME, right? So if you go, You're gonna make me do it in Nikkei trade now. Okay. I usually like to do it overnight, but basically it's in the contract specs on the CME website, and it is indeed $25 per tick. Now, if I enter a trade, okay, let's enter a Nikkei trade. You will see that on the dome, it starts to tell you how many ticks per point you've got. So 25, 50, 75, 100. So that is basically the same information that you will get for CME. But I think even if you like just Google Nikkei or NKD tick value, value for the Nikkei futures contract on the CME exchange is 5 points, which is equivalent to $25 per contract, right? But yeah, that is 25, so it's pretty expensive. But you know, it does move. It does move, so I'm gonna close this out now. But yeah, 25 ticks per contract. I prefer to trade it if I'm going to trade Nikkei. I would probably trade it for the first part of London. But yeah, it's an expensive one. So it's like silver is expensive, Nikkei is expensive. I mean, to be honest, S&P, the full S&P contract is actually 62.50, but nobody offers that because no one, like, you know, no one's going to trade it. So we trade the minis, which is $12.50. However, every time you're trying to determine what the tick value of the product is on the futures, you can just go to CME, or you can now Google it because they have a lovely AI tool. They can then tell you what tick value. So you just go product you're trading, futures. So let's say NKD futures, tick value, and it's going to spew it out. So that's very useful when it comes to AI. I quite like that. All right, so yeah, boring session. This crude oil is now pulling back again. It's just moving, like, what are these candles doing? So let's see. Yeah, so this whole thing is barely 60 ticks. So from the top to bottom. In Asia, high is being supportive, so is VWAP, but that's not what I'm looking for here. I would like to see a breakdown of 68s. Why? So just reminding you on crude oil, because we have the overhead supply, right? I don't like going longs straight into supplies. If we had a bit of space up to supply, yeah, maybe. But for now, this is all just like, there's no setup. So I've got to be patient. I've got to be patient. Maybe after PPI is over and done with, we can, you know, we can find a better trade. But yeah, no London trades. With that, I'm going to wind it up a little bit earlier today because it's been a very long week for me. And yesterday I wasn't feeling that great, and I'm still not fully back. I don't know whether I've got like some sort of a cold that hasn't actually appeared yet. Because yesterday when I got up, I was like sneezing for about 20 minutes. And I thought maybe it's just dust because we had like contractors and stuff. And now I'm getting the house valuations because we do want to move. So I thought it was maybe that. But then throughout the entire day, I kind of felt really terrible. So I do hope that I'm not going to get sick or something. But yeah, hopefully not. I don't really get sick very often. I have a chronic illness, but that's a different thing. However, you know, I haven't had a cold probably since like last October, which is pretty good going, I think. So fingers crossed it's not a cold, because that would really suck. But yeah, I have been feeling a bit more tired than usual. Anyways, do we have more questions? We have one more question. Let's do that. Stefan says, hi, what platform do you use? Okay, so this is TopstepX. This is TopstepX. I use it for execution. That is where our live and XFAs are. So live funded traders who choose to be on TopstepX will have this platform, and all of us who are on air with Topstep, we use TopstepX. Now for charting, I have my own platform, which is on AM Futures MetaTrader 5 with my own indicators, which are Blotic indicators. That is my software development company. So full disclosure, we make indicators that you see on my weekly strategy videos on my own YouTube channel. And I do release those every Sunday. So you may want to check that out. I have some cool tools that plot all of these automatically for me, and then if I also press one button, if I kind of start dragging my mouse, it also starts dragging the levels back in time so that I can very quickly see what exactly happened at which point, and I don't have to use any third-party things. It's just all there for me on the chart. I've always maintained a separate charting platform and a separate execution platform. And then if I'm going to use the same platform for charting, I typically have two instances of it. One for charting, which is different colors, and then one for actual execution, so that I never confuse those two. But this one, this is TopstepX. It is by TopstepX. It is a white label TradingView package. And then they've done a whole bunch of customizations. Now, if you want to be involved in the development of the platform, you can help shape it, right? So if you go clicking on the little question mark, you can see all of the lovely all the lovely requests that our users have done, and you can see what is planned. Here's the roadmap. We can say finished improvements to performance stats page, then show trade executions on the chart. That's done. Allow traders to choose position appearance. Improvements to trade copier. Like a whole bunch of stuff that users have actually requested. So this way we can be involved in shaping TopstepX into effectively getting them to create whatever we want. Adding new products, maybe adding new indicators, whatever you want to see, you need to put it in there, and then people vote on it, and then they effectively just go and decide to put some projects at the top of the list, and then they give it to us at some point. So it's an awesome feature. It's a great clean platform. I do wish that we had more tools that I use. Like, I know the TPOs are coming, but yeah, I do like it. It's taken a while. So, you know, full transparency, it's taken a while for them to get rid of some bugs that occasionally happen. However, if any bugs do happen with the platform, they will always roll back the negative. Like, for example, if your platform freezes, or there's something that happens with the brackets and it's just a platform-wide issue, they will just roll back the XFAs and the combines. So, you know, they've always done right by us. They have always been amazing to make things right, okay? So you can have full confidence in Topstep, in the company, that if something does go wrong, they make it right, okay? So this is why Topstep is so amazing. They genuinely care about their traders. Yes, they're a prop firm. Yes, obviously they're doing very well, but they care about your success because they do have a live prop trading desk. It is not the same like many other companies out there. And in fact, I think there's only two others. In fact, only one other that is based in Chicago that is a reputable firm that actually has live traders, and that's Trade Day, right? You have another one which is Earn to Trade, but they're not headquartered in the States. They're actually headquartered in Hungary. But yeah, they're also good firms. So, you know, there are very few firms that actually want to see their traders succeed, because the nature of what the prop industry has turned into since COVID, which is a good thing and a bad thing, but, you know. All right, guys, thank you so much. I'm going to go finish this up and then have a big break before I get into the main part of the session in NYMEX. I don't think I'm going to be doing much trading before then because everything is looking a little bit slow. So they're probably waiting for PPI. So why don't we also wait for that? Then we're going to have some movement. And I will see you later when I join Dakota on the main live stream for his TopstepTV takeover. That's it. See you later. Take care.